Hi, good afternoon. Welcome to the marketplace. Coming up, oil prices extend gains after the killing of a Hamas leader in Iran raises a threat of a wider Middle East conflict. We'll discuss. Also coming up, whoever wins election 2024 has a huge debt burden to carry. Zero-bond debt servicing obligation alone hits more than $800 million in 2025. We'll have more as Ghana still is described as a debt-distressed country even after a painful debt restructuring operation. Plus, more analysts express worry government may not be able to finance priority spending such as education and agriculture in 2027 after exit from IMF program. We hear from economist Professor Prof Bokpin.
The conclusion is that there is no way we'll be able to meet these financial obligations without altering our fiscal policy and financing decision.
Errol Kwao, thanks for being with us. Details coming up. And thanks for staying with us, everyone. Oil prices have extended gains after the killing of a Hamas leader in Iran raised a threat of a wider Middle East conflict and concern about its impact on oil. Brent crude has risen to $81.36 a barrel. That's about 4% jump. Meantime, fuel prices are expected to go down between 2 and 4% in the first pricing window here locally. That's this month. Joining me on Zoom, Dr. Yusuf Suleimana, an energy strategist, also Chief Executive of energy consultancy firm Eureka Energy, just to make sense of what is happening outside of the country and its implications locally. So good afternoon to you. We're yet to see if oil marketing firms are adjusting prices just yet, but how does the escalating Middle East tension potentially affect this projected drop in fuel prices?
Yeah, thank you very much, Daryl, and good afternoon to you and to your cherished viewers in Ghana and across the globe. Yeah, indeed, this is the situation. The international scene is not looking that friendly. Hitherto, if you look at the projection IES made, they made it based on the fact that, oil prices were supposed to stay slightly below the 80s. So if, let's say, taking out what is happening now, then we should have been expecting marginal drop in the prices. But if players are to factor in the premium that is happening within the Middle East and project further, in fact, I would argue that we could have even an increase, not immediately, but if we don't take care and if we are unable to control, to have control over, what is happening within the Middle East, then the chances that the impact on the downstream side will be that. And what is happening in the Middle East, just to give you a picture why people are worried about that. Now, the conflict between Israel and Hamas, or sorry, between Israel and Palestine has been on for some time now. But players were of the fact that it will be contained. Now what is happening is that the war has lost containment undoubtedly. And in this particular situation, just a few days ago, one of the lead negotiators from the Hamas side was killed. And if he was not killed from any other place but Iran. And if you look at Iran, is a huge force to reckon with. And so it's not surprising that even without anything, oil prices jump immediately to 4%. And they promised that they're going to retaliate. And so this were some of the things that analysts were or pundits who understand the geopolitics of this situation were wondering about. People were thinking, oh, this war is just within Israel and Palestine area. They are not oil producers. But within the Middle East, the spillover and then the loss of containment it could happen. And that's what has happened. So the chances are that if Iran retaliates, and depending on the quantum of retaliation or the magnitude of retaliation, it could send oil prices to heights that we might not be able to understand. The prayer is that, or the hope is that, the players who are involved, who have huge influences on the oil price or on the players who are within this conflict, they have nothing to gain when oil prices increase. Number one, US, for instance, election is on the horizon. And the huge premium of this particular development that is happening, if they don't step in to rein in their place, let's say US stepping in to rein in Israel and other, maybe the Arab world also then coming together to be able to talk to Iran for who had to prevail, and therefore for the retaliation to happen in quantums that or in levels that is huge enough to impact the whole region. I think oil prices has potential to go even to the 3-digit figures. My bet is that the place is not in the interest of any other player. So yes, they may come in to be able to tell these players that this is not the way to go. But the way forward is just to end the conflict within the Middle, to end the conflict between Israel and then Palestine. And I think the stakes are high, the premium is high, and I'm just hoping that those who have the influence from the Israeli side and then from the US side, they should be able to step in, to let cool heads prevail. Other than that, anything out of this, if it's not contained, I think the level that the escalation, the level may not go to maybe level that people may not like, and that would decide the down.
All right. Just want to ask, do you see a situation where the OMCs locally backtrack and say, let's watch what is happening before we go ahead to drop prices? Like I was pointing out, we've not heard if they are dropping prices yet as we expect. Do you see that situation going to happen? Plus, the other factor, the other determinant is the city, which is not doing pretty well right now.
Still coming to that. Unfortunately, that is another area we don't have control. I mean, we are not able to have a firm handle on. That is the performance of the city. If the city was so stable or had performed better, I think most of these ones, the impact wouldn't have been that much that we are having it now. But unfortunately, the city is not doing well. Yes, I also foresee that they may do what we call wait and see. And that I think they're going to do. I predict that they will do that because that's the nature of our players. Of course, if the other way around, they are easy to increase, but reducing, they are always waiting for the market to cool down. And if you look at what is happening, like I mentioned, they are likely to do the wait and see. My hope is that they will reduce, but if you look at what is happening and the fact that it's already jumped by 4%, a lot of them may do wait and see, and they may not reduce that we're expecting. That may not happen, yeah.
All right, my final question, the OPEC Plus ministers are meeting today, we understand, to decide on an output policy. How do you think that would go, and how should our government position itself to mitigate against any impact?
Yeah, so I've said it several times that, if you look at the oil market, if you look at OPEC, and since even since 2019 to 2020, after COVID, they came together and made a supply cut, and the supply cut was to prop up the market. Until now, they are still staying put, and they are still staying course on the supply cut. Because if you look at what is happening, OPEC is not ready to lose twice. Now they are losing the market share to US shale. And they're also saying that, if you don't hold onto the supply cuts, there's nothing to gain. So my prediction is that, or what analysts are predicting is that there was a likely stay put on the supply cuts. They're going to hold on the supply cut, the barrels are going to be held. There's no way the OPEC is going to release the barrels onto the market. Because US shale, they have a potential threat from US shale where they are ramping up production. But globally, what is interesting is that barrels, inventories are going low globally. So that is not that doesn't portend anything good for the downstream. That's why we need to have a backup. We need to have local strategies as a backup that when this international dynamics hit, we are not going to be hit that much. Because not every country that will be impacted much. But if you look at our situation, unfortunately, we don't have that robust strategy that are put in place. We don't have a local refinery. We don't have robust storage capability. These are the things that will push in every nation when these international dynamics don't work well to your favor. Unfortunately, we don't have them. So yes, it's very unfortunate times, and there could be hard times ahead, and the downstream will be hotter before it will become colder, especially with the development that is happening within the Middle East.
All right, Dr. Yusuf Suleiman, the energy strategist, also chief executive of Eureka Energy. I appreciate your time with us this afternoon on the marketplace. And you know that when fuel prices go up, they have an impact on inflation as well. It's an election year, and the politicians will be looking at that. Up next, business and politics. All right, thanks for staying with us. Now, external debt rewere concluded, but any political party that wins the 2024 presidential election is faced with outstanding Eurobond payments of more than $500 million and interest payments inching close to $300 million. Now, Ghana's fiscal ability to service its external debt has been at the center of election talks, especially as the city continues to struggle against major trading currencies. So what's the burden ahead? Lead data and research analyst here, Joy News, Isaac Ofeji, joins me on Zoom with a breakdown for our business and politics segment. So Isaac, walk us through the debt burden.
Right now, if you can hear me, I mean, both political parties are aware of the burden ahead, and I'm talking about 2025 onwards. So whoever wins the election, just like you put it, has a high, responsibility to actually, carry out in terms of debt servicing obligation in 2025 and beyond. So if you ask me about the burden ahead, in terms of the graphs and the chart that we've looked at so far, by the research desk, you could see that, but for the debt restructuring, Ghana's debt obligation in terms of servicing the debt on just interest payment and fees and other charges on the Eurobond market was about $2 billion. But after the debt restructuring, we've seen the relief that we've had. So you have on your screen the restructuring that we've done. And so this year, after the restructuring, we are expecting to pay those who would decide to go for the power bond some $12 million, disco bond $169 million, and in total $181 million in interest payments in 2024. So although we are talking about debt moratorium, haircuts, and what have you, even this year, Ghana still has a high responsibility in servicing that huge debt. If we can go ahead in terms of the graph you have on your screen, you can see that these are the principal payments that are standing in the Eurobond space. And majority of them, just like you see on your screen, so if we can go press on the button again, we will see the the figures allocated to each of the graphs or the bar chart, and you see that in 2025 we are talking about, that's next year, right after the election, whoever wins must service Eurobond principal outstanding of more than $500 million, $525 million, and in 2026 that is where the major hurdle is. That is right after almost we are done with the IMF program. I'm talking about almost 2.3 billion Ghana cedis. Then after that, we have the moratorium on bilateral debts almost elapsing. Then we'd have to now start servicing moratorium on bilateral debt as well. So what you have on your screens in terms of the obligation is debt is just outstanding Eurobonds for only outstanding principals for only Eurobonds, and there are huge burdens ahead. Right after the elections, we are talking about some more than $500 million, and in 2026, more than $2 billion.
All right, next graph, we are taking a look at the Eurobond interest payment burden before and after DDEP.
Yeah, so you see, I was talking about the fact that the DDEP has actually really helped. If you look at this graph, in terms of what we were supposed to pay, but for the debt exchange program, on the Eurobond space, we are talking about more than $1 billion. That is before the haircuts were carried out. Now that we are done with the external debt restructure, which is the EDEP, we are moving from a debt servicing obligation of more than $1 billion to now $298.3 million. So we've saved for ourselves an amount of $741 million in this short space because of the restructuring. So the restructuring has done some sort of good, but looking at the health of the Ghanaian economy, a debt obligation of almost $300 million on just Eurobond interest payments alone in 2025 is still very huge.
Well, that's interesting. If we could go on to the next slide where it talks about the new Eurobond debt servicing burden, the payment schedule, that's coupons plus principal.
Yeah, So the first one that we just looked at principal alone in terms of the debt servicing obligation and the interest alone. Now we've combined the principal plus the interest in terms of how much government of Ghana is supposed to service on the Eurobond space. In 2023, after the restructuring, we are talking about $477 million. That's past. But this year, in 2025, that's right after the election, any government that comes to power is looking at somewhere $692 million in servicing of debt, coupons plus principals. If you add charges and other fees, that could go high. Then 2026, we are talking about $1.3 billion, 2027, $1.1 billion, and you could go on and on and on. So the problem has not been solved yet, and both political parties are aware that what they have currently is just a breathing space, more or less like postponing your problems to a later date. And they are all aware that the burden ahead is very, very huge, looking at the graph that we have on the screens at the moment.
Right, and the value of our loans pegged at least $2.69 billion, according to this next slide that we have seen. But the next one gives us a breakdown of the key loans we have taken since December 2022. Can you run us through?
Right, so that figure, the more than $2 billion showed. This is the reason why it's important. We are trying to put ourselves in a sustainable bracket in terms of our debt portfolio. But even after the restructuring and what have you that we've done, and the advice from various institutions for us to reduce our debt, accumulation, we are still talking about a debt of more than $2 billion after we decided that we can no longer pay our debt in December 2022. And of course, you have some of the loans we've taken after that announcement in 2022. We've taken the Gary loan of 150 million Ghana cedis, the first, resilient recovery development of $300 million, Cocoa syndicated loan, $800 million, Ghana Digital Acceleration Project, $200 million, Accra Temamoto Way Project, $338 million, Energy Sector Recovery, loan of $260 million. If you add all of this, we are talking about some almost $2.7 billion, even after the debt restructuring program. And so we keep borrowing. And so we have to ask ourselves, do we have the fiscal mechanism or the fiscal muscle to pay all of this debt when they are due? Because if we do not schedule them really well, or we do not restructure in terms of how we are going to pay.
All right, it appears we may have lost Isaac Ofeje. We'll try and bring him back on whilst we talk about this. We want to bring in, okay, Isaac, I hear you're back. You want to finish off on the point you're making?
Yes. So, yeah, if you look at the figures, it tells you that the burden is not now. It's actually after the 2025 elections.
Right.
And the key question is...
Yeah, finish that.
Yeah, the key question is, do we have the muscle to do the debt servicing obligation ahead of us?
Yeah, pretty soon we'll be hearing from Professor Prof Bokpin, who expresses worry that we will not be able to finance key fund priority sectors of the economy after we exit the IMF program. But we know that the NDC flag bearer, John Mahama, has said that the government could renegotiate the IMF program. Is that possible?
Well, that's possible. I mean, Ghana will not be the first country to renegotiate an IMF deal. We've seen, Argentina, Ukraine, and other countries all renegotiating their IMF deals, especially after there's a change in government. He says when he's voted into power, we are not predicting that he'll come to power, but he says when he's voted to power, he is going to renegotiate the IMF deal. But the reason why, in our case, it is going to be a bit difficult is the kind of complex negotiations and agreements involved in Ghana's debt restructuring and this very particular 17th IMF program. Mahama should understand that the 16th program that he embarked on is completely different from the current one that we have. What he had did not have any form of debt restructuring. There were no haircuts and what have you. A renegotiation is tied to a whole lot of, legal, stuff that can come in terms of even paying judgment debts and all what have you, because there are current agreements with some of the, creditors. I do not know the kind of renegotiation he's talking about, whether he's going to ask for an extension, whether that's going to be the renegotiation, or he's really going to talk to the creditors to give us more haircuts. I do not know the renegotiation. Maybe he needs to give us better and further and better particulars in terms of clarity, how the renegotiation is going to be. But it's open. When you are under an IMF program, it is possible that you can ask for a renegotiation. 30
seconds, Isaac. Do you know what the strategy is of the flag bearer of the MPP, Dr. Mahmoud Bawumia, in the midst of these concerns about what happens when we exit from the program, whether we have enough monies to fund key projects?
I mean, he's been part of this administration, and possibly he's privy to what we have at the moment, the current agreements we have. And so the key...
All right. Just a bit of a glitch over there, but Isaac Kufeji, we'll leave it here. Let's listen to economist Professor Prof Bokpin, who has pointed out that the country may not be able to fund priority sectors of the economy when the country exits the International Monetary Fund program in 2026 due to debt obligations of over 130 billion cedis that will be reactivated. Listen.
In our history, for the first time, under the 17th IMF supported program, we decided now to create a budget line to accommodate the energy sector shortfall, because we're treating it as off-balance sheet. Okay, so now we've costed that. We know the total obligation. We know the shortfall. And this is, so on annual basis, we are looking at more than 23 billion cedis that Ghana government must make up in order to keep the lights on. Currently, Winston, we don't have that fiscal space. You understand why yesterday in Parliament, there was a loan discussion, right?
Yes.
So, as part of the IMF supported program, we have developed a comprehensive strategy to deal with the energy sector. Your ability to translate that strategy into actual depends on resource reconfiguration. We don't have the money. All the time we are talking about a loan and the rest of them, okay? So substantially, the conclusion is that there is no way we'll be able to meet these financial obligations without altering our fiscal policy and financing decision. We will only do so at great cost by crowding out priority spending in the area of budgetary allocation to agriculture, health, education, social protection. Winston, is already happening. If you look at ACEP, Africa Center for Energy Policy, has actually done this work to help us a lot.
Well, one final story before we go. According to PwC, approximately 43% of family-owned private businesses lack a succession plan. However, partner at PwC, Edward Aram Gomado, believes that deliberate and planned business cohesion can significantly improve this statistic and drive growth. He spoke with Joy Business at the PwC Business Forum in Accra.
Private companies encounter a variety of challenges, including sustainability, succession planning, regulatory compliance, and good corporate governance. Research by PwC reveals that 43% of family firms lack a succession plan and only 12% survive to the third generation. In an interview with Joy Business, Edward Aram Gomado, a partner at PwC, emphasized the importance of a planned cohesion to drive business expansion.
When it comes to private companies, you are not only focused on the business success, you also need to plan for the family cohesion. And so having the family success and business success working together hand in hand takes you to that destination. Now, when you go through that process, you will develop what we call the governance. Governance for the family, governance for the business. Family businesses are significant contributors to economies they operate in. In terms of employment, private companies contribute in excess of 60% to national employment.
Executive Chairman of Nyaho Healthcare Limited, Elikem Tamaklo, highlighted the necessity of a robust corporate governance structure.
I think that to be able to bring people together in the board, and if you talk about corporate governance, it's really about how you have the right skills at the table for the type of decisions you have to make. And so that's really what corporate governance is. And then once you have the right people, can they work together to help the business thrive? Because
all right, and that's the marketplace. Thanks for watching, everyone. There is more news on our website, myjoyonline.com/business. Bank of Ghana's independence should remain a priority, the IMF to the government. Also, addressing Ghana's financial sector challenges essential to ring-fence financial sector stability. That's according to the IMF as well. myjoyonline.com/business. My name is Darryl Kwao. Thanks for watching. We will be back same time tomorrow.